Hey, it's Elena Gordon, broker of record with Remarks Gordon Group Realty, and we're going to talk about the stats today. And let's start from the economics indicators. In February this year, as you can see, real GDP growth is up. Toronto employment growth is up, it's 2.4%. Toronto unemployment rate is up, it's 6.8%. Inflation is down, and in January this year it was 2.9%. If you compare to last year, it was 3.4%, so it's a good result. Bank of Canada overnight rate is still the same. In February it was 5%, and prime rate in the major banks of Canada, they're 7.2%, but mortgage rates inside the bank, they're going down. My clients were getting 5.25 or 89 fixed mortgage rates, and it's actually much better. Next, it's total residential transactions. So we sold 17.9% more in February this year to compare to February last year. And it shows that market is more active and the buyers are more positive regarding their buying. So, and actually they go on the market and start shopping and start to buy. But look, if we look on seasonal adjustments, you can see that February this year to compare to January this year, the sales down by 12%, and it's kind of question, why is it, right? I think because we had a lot of inventory and desperate sellers who were sitting on two mortgages and they were willing to sell for less, and it was a good deals. Cheaper properties and good deals, they usually go faster, so we kind of sold this kind of inventory in January. That's why the sales were actually up higher than in February. In February we just dealing with regular price and regular market. And next is average selling price. So we up by 1.1% in February this year to compare to February last year. If we look on the seasonal adjustments, we still up by 1.3%. So it's still proven, even though we sold less, the price went up by 1.3%. That means we just sold more cheaper properties in January, and now we just come into a regular market. Next will be new listings, and we see that we have 33.5% more new listings in February. That shows the market is actually getting more active right now. If we look on sales to new listing ratio, in February it's 49%, and it's down by 7% to compare to February 2023. And sales to new listing ratio, it shows what market we are, up to 40%. It's a buyer's market, 40 to 60%. It's a balance market, and 60 and up percent it's a seller's market. So now we are on the balance market. Days on the market. Days on the market up by 12.1%. Now it's take about 37 days to sell the property to compare to February last year. And I think days on the market are up because we accumulated a lot of inventory over the last year. Next, my favorite slide, sales and average price by major home types. And if we look at the year-to-year change, we see that actually we are back to normal situation when 905 area is going up in price more than 416 area, because usually 416 area has a more expensive land and it's more expensive properties. So detached houses in 416 area are down by 3.5% to compare to February last year. And in 905 area, it's up by 1.7%. And look, semi-detached houses, they are up by both areas. 416 area, it's up by 2.8%, and 905 area, it's up by 5.2%. We have more demand in that particular type of the property because they are cheaper than detached houses, and we still have affordability problem because stress test is still high. And next it's townhouses. Their 416 area, they down by 3.4%, and 905 area, they are up by 0.9%. In condo apartments in 416 area, we are down for the price by 0.44%, and in 905 area we are down by 3.4%. And I think this price change in condo apartment, it's due to the inventory we accumulated through the past year. So when we have more inventory, the price going down. Now, to summarize everything, yes, it's a spring in the air, and we kind of have more activity on the market, and especially with the buyers, they're actually more confident to go and shop for the houses, and with central bank promises to get the rate down, so it makes buyers more confident in the purchase, and they are more adjusted, and buyers more adjusted to the higher borrowing cost already because it was for the whole year. And we have more buyers coming to the market from the renters, because if they have a down payment, it's basically almost the same when they pay for the rent or they pay for the mortgage, but when they own the house, they start to accumulate some equity. So inflation is down and it's 2.9%. We are almost on target rate for the central bank. The target rate was 2%, and it's a good sign for the good year. I want to finish this market update on a positive note, and I'll see you next month. This was Elena Gordon with Remax Gordon Group Realty.